All right, thank you for the kind introduction. We have on stage very senior very senior panel here with us. We have Brian from Aegon Blue Square Re, we have Tarun from MetLife, and we have Parul from AXA Next. Thank you for joining us on this very exciting panel, and to the audience, thank you for being here. It's lunch break almost, but it's a very exciting session actually coming up for the next 40 minutes. We're going to talk about a few aspects in the business side, on the technology side, and innovation culture, all for the specifically for the life and health insurance sectors. So my name is Robert, as already described, as already said. I'm heading the corporate partnership side at Plug and Play. We are an innovation platform where we bring together relevant startups with corporates, but we also invest in startups. We have 40 minutes here, and there will be 2 poll questions in this for this panel, and it seems that you also have the option to just shoot questions through to me, and then we can also address those. Maybe if you want to say a few words about yourselves and your backgrounds, Brian.
Okay, good morning, everybody. My name is Brian O'Malley. I am Head of Business Development with Aegon Blue Square Re, that is based in the Netherlands. It's the internal reinsurer of the Aegon Group. Previously, I've worked for Generali Groups and the Aviva Group, and also worked for local insurers in Ireland, who are now part of the Great West Group. My background is actuarial. I've worked across the full gamut of functions of life insurance companies. My experience has mostly being on the life side. Last couple of years, maybe dipped my toe into the non-life side. I suppose also in the last couple of years from when joining Aegon Blue Square Re, it is an internal reinsurer. So traditionally you would expect us to be optimizing the profitability and balance sheet, and we do that, but unusual for an internal reinsurer, we focus quite a lot on innovation and driving innovation within the Aegon Group. So looking forward to speaking to you and getting some of your questions.
Hi, I'm Tarun Setharaman. I head up strategy and A&H from MetLife in Europe. For those of you who are not familiar with MetLife, we are a global insurance company specializing primarily in traditional life, A&H, annuities, employee benefits, and some asset management as well. I have about 15 years experience in the insurance industry, covering a wide variety of functions, including strategy, M&A, business development, and product management.
Hi, I'm Parul Green, and I'm saving this panel from becoming a manel. Other than that, I head the European labs and new business for AXA. By background, I am an investor, economist, and a strategist. I've worked in banking, asset management, and now insurance. People say I'm going up and up in bureaucracy. It is true.
All right, thank you for the introductions. I think that is a very great blend of experiences, and we see a lot of movement in all these areas over the last couple of years. And if I may, bring up a little anecdote of myself, which kind of highlights that as well. My actuarial professor in the US always used to say, insurance is a great business. It lets people do more crazy things. And now here we are 10 years later, and we're insuring through InsurTech or whatever it is, we're insuring, bungee jumping and other very, very risky activities, right? So I guess there's some truth to that prophecy, to that notion. And I'm sure that you also have a couple of great success stories to share that you know, that you're aware of, or even in-house. Obviously, we'd like to hear those. But before we dive into these details, maybe let's discuss briefly what actually happens around the insurance industry. So let's see what the external factors are that drive these changes and that drive these innovation areas forward. So maybe Parul, start with you.
Yeah, in terms of demographic, and this is very obvious, longevity impacts life and insurance, and not just longevity in itself. There is a chronic disease management, chronic disease, which is coming along with this longevity in European and US demographics. What that does is that it escalates the cost of healthcare, which is impacting life and health insurance significantly. Other than that, there is a broader technological changes which have escalated, the fourth industrial revolution that World Economic Forum talks about, is taking on and democratizing technology. So that is impacting the customer behaviors and customer expectation. So, and there is a greater need for digitization and having a customer interface which is more frictionless. So all these changes are directly impacting the value chain of all life and health insurers.
Maybe Brian, do you have further thoughts on this?
Yeah, I suppose in terms of the major trends that I'm seeing in the life and healthcare at the moment. So firstly, I would say maybe it's the drive for personalised insurance and what we would call the quantified self. So in terms of, we've seen a lot of product providers, head down this route. And, in terms of people willing to share data, for effectively some financial benefit. And in my home country now of Holland, so we would have had a survey recently that 45% of people were willing to do this. I was surprised that number was as low as 45, bearing in mind the frugal nature of the Dutch people and so on, but just as an aside. But I suppose in terms of this drive for personalised insurance, there's kind of a number of consequences. So certainly there's some good consequences, I think, because it's going to push the industry in the area of picking up the previously uninsurable. And, with a lot of data being requested and circulated, that's certainly something we're beginning to see. But I suppose in terms of the more kind of neutral impacts, I would have felt in relation to this move for personalised insurance, it would be kind of a completely different way. We're heading for a completely different way of underwriting the risks. So the reality is, some might cynically say it might be a zero-sum game in terms of you're using different risk factors, but the existing incumbents cannot ignore it. And in terms of in 10, 15 years' time, we will be using different probably risk factors or proxies for risk factors. And in terms of just to kind of, it may be a difficult pitch internally to kind of, we'll say, to stay alive and pitching this, particularly to life businesses that are quite old and have long legacy books. And what I would have said in terms of other trends, maybe on the regulation side, and I know regulation sometimes is kind of boring, but it does have a kind of an impact on what we're doing and so on. And so in terms of privacy, I would have said, and this may not resonate with insurtechs as much as some of the big existing players. Okay, we've gotten over GDPR in a European context, and it's obviously going to make further tracks in terms of equivalent regulations worldwide. But I would have said both companies and regulators have yet to grapple fully with the extent of this. And I would have said that big deadline we had last May in 2018 has been hit, but there are still some further follow-on. And it's kind of taking a lot of focus and kind of attention within companies. Also, I would have said in terms of Solvency II, we've either had intended or unintended consequences in terms of longer-term products and products with guarantees. So we see in the life side, in particular, a drift towards, the other end of that spectrum in terms of lower capital. And also possibly I would have said in terms of the way regulators have been reacting, and you would argue fairly in terms of consumer protection, and we've had some kind of mis-selling scandals or high commission kind of scandals and so forth. So this kind of value for money, we'll say criteria set both by regulators and both by corporations and so on. What I feel that's bringing, I suppose, implicitly over time is that there will be kind of, we'll say, penalising the winning products. And if you're pricing long-term products and you have to take certain risks and certain unknown risks, fine, you would probably have to end up giving a lot of that back to customers and so on. Whereas unfortunately, if insurance companies and risk pricers get it wrong on the downside, they got to take it on the chin. So possibly you might see a convergence towards kind of the reality turning out like what people had expected it to be. So that's kind of maybe something that was maybe unintended on the regulation side, but that's where things are heading as I would see it, kind of thing. And also too, maybe prompted by Solvency II and various capital allocations, a lot of companies falling out of love with their back books, and they're kind of, we've seen more the emergence of consolidators in the last number of years, kind of thing, and outsourcing, and life companies or non-life companies are kind of asking themselves what actually are they good at and so on. Last kind of trend, because I've talked a little bit now, the last trend I would have said is that in relation to some of the larger groups in the developed countries, the product propositions have often led what they've done in other countries, and maybe, you know, if you wanted to be cynical about it, maybe they might have viewed that in the less developed countries they will kind of repeat the products of the past and, you know, made higher margins and so forth. Now, that's probably not materializing as quickly as it may have thought, in terms of these markets are catching up a little quicker. But I suppose on the positive side, I think these markets are genuinely being used by the larger groups to experiment and as their playground, because they seem to be more adept and agile at actually experimenting. And there's a genuine, we'll say, wish and need for those to be plugged and played around financial groups, more so than has been 5-10 years ago.
All right, Tarun.
Not sure what I could add to that. That's pretty good. So maybe a couple of thoughts. So first one, I think we're seeing issues around growth. So the markets haven't really grown a hell of a lot over the last 5 or 6 years. We're talking about low single-digit growth globally and definitely in Europe as well. So growth has been a big concern for us as we look at some of the external forces affecting the way we look at our business. And then what that creates is more or greater competition, or more intense competition within existing incumbents. So that sort of progresses down to this question around, well, how do we maintain our margins? You've got intense competition, you've got low interest rates for a sustained period of time, and then as a result, we've had to really relook at what we do and how we want to run our business. But I think those two have been driving factors in addition to the aspects that Brian and Parul mentioned as well.
All right, so I guess we kind of agree that regulation, customer behavior, demographics, and risk metrics as well do have a driving impact and make it overall more competitive, the entire game. So Tarun, how do you address specifically, or how do you think insurers in the life and health space address these challenges, changing their business models, their strategies?
Sure. I mean, there are a few different levers you can pull, I guess, when you think about all of this. The couple I would mention is definitely the digital transformation work. So quite clearly, efficiency sort of moved up the agenda internally, I would say, and we were always looking at ways that we can improve, lower our unit costs, and see ways in which we can work better, more efficiently. So we're spending a lot more time on our digital work. So that's just upgrading where we are today, so almost the table stakes, so to speak. And then also really looking at some items that are innovative and that can really lead us into the future. So I think there's a lot of time, effort, and resources right now in terms of upgrading digital capabilities. And then the second area, I think, is we're much more open to partnerships or third parties sort of working with us. I mean, traditionally and historically, we've been very much internal focused, I think, as an industry, and we felt that we could sort of solve all of the problems ourselves. And I think the reality is there's probably a better or more efficient way to do that. And so we're definitely much more open to partnering across the value chain. You know, whether you're talking about product development, proposition development, underwriting, claim sales, whatever it is. I mean, we are open to that because we do understand that can create some better economies for us.
All right, thank you. Parul, further thoughts? Further thoughts on how the business models can change, the operating models, business?
So my part of business, which is AXA Next, our core job is business model innovation and moving the AXA Group from payer of claims to a partner. And this is intrinsically linked to the concept of move to value-based care. For those of you who are not familiar, value-based care, healthcare essentially talks about moving from paying for services to paying for outcome. So patients today and individuals who are looking for care are wanting outcomes rather than paying for having sat down in front of a GP who gave them no results or consultant who misdiagnosed them. So once all these things become very important, there is a greater move towards preventative care, helping the customer through their ailment journey in terms of treatment adherence. These are areas that digital technology and especially mHealth, mobile health technology, can really support. So in terms of business model innovation, the areas within health and life that we're seeing the greatest traction is in mHealth, in treatment support, in wellness and life lifestyle management, in things like diabetes management, cardiovascular disease management, patient care, IoT-led patient care, and a whole host of care coordination solutions where new and very interesting business models are emerging due to the technological changes.
Thank you. A little note on that, actually. I think in Asia, I think a few hundred years ago, doctors were paid differently, just similar like what you described.
In China. In
China, yeah. They were paid when patients were healthy, and they stopped paying the doctors when they got sick, right?
Exactly.
So yeah, maybe we should rethink our entire value chain there and learn from the old school. Right, so, and Brian, any further thoughts on this one in terms of change of the business model and operating models?
Well, I just a couple of things to add. Maybe in relation to the digital transformation, it's obviously a very wide field, and all companies are trying to do more in that in terms of all areas of activity. One area in particular I think they're struggling with is the distribution models, and they haven't really worked out yet, how they can do that efficiently and how they deal with channel conflict and product conflict and pricing and so on. Another area, obviously, how the industry is reacting is customer engagement, and I suppose the good news here is that customers actually want it. So there's also the carrot of a cost kind of, I would say, metric for companies if they decide to do more in this space, kind of thing. And I suppose just in general, I think all the players are kind of looking at the new reality that there still will be an insurance need, albeit we'll talk a little bit maybe more about that in terms of the way pricing has gone and so forth. But who are the players going to be in the future? So from insurance companies to reinsurance companies to distributors, there's kind of a healthy kind of, we'll say, look at each other kind of thing, and they're all kind of wondering where they're going to be in the future value chain, and picks up maybe parts of what Tarun was talking about in relation to partnerships, and maybe companies realizing their insurance companies not realizing they're not brilliant at every single aspect they thought they were on the value chain, and it's kind of reviewing their business models in that kind of area.
Thank you. Maybe to add, also chime in here from the plug and play point of view, this topic of partnerships, we also see as, this is one of our core business models, and we've seen the last 2 years being very active in terms of exploration and scouting, and really just understanding what's out there in the market and how you can learn from insurtechs. And we feel that it's getting more and more traction now, that there are more and more partnerships actually happening, getting in place, and that would really drive value. So you basically combine two worlds and make the best of it. And one of the big aspects in there, obviously, is the technology behind it, where the insurtechs are very strong. And this is going to be a poll question, moving over from the business to the tech side. What do you think, the first poll question, please, what do you think are the biggest enablers, highest impacting technologies in the next 2 to 3 years? Is it going to be AI, obviously including machine learning, deep learning, and other techniques? Is it RPA, robotics process automation? Is it blockchain? Or is it advanced analytics? And while the audience votes through the app, maybe we get your thoughts in the meantime. So let's start with Brian on this one.
Yeah, I don't have the app in front of me, but if I was voting, I suppose my personal bias would take me to advanced analytics, but I don't really have a strong view, I would say, just in relation to the poll question. And before we get into the details, I suppose my general comment on all of these tech items mentioned and other related items, I think we need to kind of keep a view on the prize in terms of it should make access easier to insurance. It should make insurance cheaper. So, while, and therefore it should help us to actually widen the protection gap, And as regards maybe some examples of where I've been involved with, and just maybe for the benefit of the audience, so in relation to a blockchain development or distributed ledger technology, probably to give it more its correct IT term. I'm not an IT expert, so people don't ask me any IT questions in major detail, please. But in terms of what it's a company called B3I. So maybe some of you who work for companies who are shareholders in B3I. So it's Blockchain Insurance Industry Initiative. And it uses DLT, distributed ledger technology. And Aegon is one of the 5 founding shareholders. The consortium is now at 13 or 14 after the latest round of funding and so on. They have not yet launched their product. They are initially focusing, and I'm talking about a number of years, in the area of insurance, reinsurance, and maybe corporate broker administration. Now, that's not maybe very sexy at the customer end of things in relation to blockchain technology, but it will be massive in terms of the efficiencies that can be made. So in relation to, there's a huge amount of duplication going on from every insurance company into reinsurance company. So if this technology and the associated software prove to deliver what they're purporting to do at the moment, there will be massive cost savings, which hopefully can be, and due to normal market pressures, will be passed through to the customers kind of thing. So certainly there will be bottom line impact. As regards to top line impact, you know, maybe in terms of reducing possibly top line in terms of premium, but maybe increasing the market and so on. Just in relation to, just kind of a general point about technology, I think in relation to all of the items mentioned and others kind of thing. I think if you look at where we have been and where we're going to, in the past we had like very rigid product development structures and very siloed kind of mentalities and behaviours, whereas now it actually feels we're heading for, or in some segments already at the complete opposite, that, you know, it's so dynamic, and that, you know, you probably have a price today and maybe people have to get used to the mindset, can you actually really go back and replicate that price? And, you know, we're gone from the concept, I'm long enough to remember rate tables and so forth, and it's kind of moving to, for those who are involved in pricing, to kind of, we'll say, heading for a fixed costs of zero, essentially. And, you know, product development and new policies become the norm of the DNA of a company, that these technologies are certainly helping us to do.
All right, thank you. Do we have answers already from the poll question? Well, anyway, let's keep on with the oh, here we go. So we have advanced analytics, actually the majority share, AI, machine learning, 33%, and then blockchain, almost 21%, and RPA seems to have little impact according to this audience. What's your take on this, Parul?
So for me, the key area in technology development where I'm most excited about is deep learning. And the reason that I'm most excited about is as someone who comes from a developing country, India, where the access to a lot of healthcare is hard because per capita doctor penetration is low. And this is the same case with Africa. The DL engines have been giving through telehealth and mHealth access to masses of people who are hit by protection gap to services which are core to any human person. So I think what I'm not bothered by artificial general intelligence taking over the world and robots, because when I speak to the experts, they always comment about there is a paradigm of artificial stupidity which is attached to AGI. There is lots of things in human cognition which the scientists don't understand, and replicating human cognition which you don't understand is a very far-fetched view. But in terms of artificial narrow intelligence and its application to healthcare, and therefore application to access to many who today have absolutely no healthcare. 50% of the world, by the way, has no access to the healthcare. And I think by way of societal good and by way of actually including more people, DL has tremendous power.
All right, thank you. We're going to dive a little bit deeper in that social aspect topic a little bit later. Tarun, any further comments?
I think I would agree with Parul on this one. I think AI, deep learning, I mean, those are probably going to have the most or the biggest impact on our industry and probably a lot of other industries over the next maybe 3 years is being optimistic, maybe it's a bit longer, maybe 5 to 7, I don't know. But there's amazing things going on out there that are quite revolutionary. I would say from a technology point of view, I mean, in MetLife, we are sort of experimenting with different ways of working and different ideas and different types of solutions. And last year we piloted, or I guess they called it an experimentation. We piloted a health insurance product that leveraged blockchain technology. So it was a full end-to-end digital solution where you could actually fill in the application on a mobile app, make the payment on the mobile, the smart contract is created, and then a claim is paid automatically when the medical records have been updated. So these are things we're doing today, and and we see that it has a huge difference in terms of our operating model, because all of a sudden now you've eliminated a whole chunk of expenses or work around some of these things that you would normally have to put in place. And so, we're, I think, continually experimenting and looking at new and better ways, I think, of working and reaching to our customers, engaging with our customers.
All right, let's stay on the topic of healthcare actually for a minute. There are a lot of insurtechs out there which try to improve and streamline the entire patient journey. So, Parul, any thoughts on this front, and what is AXA maybe doing in that area?
So, AXA PPP, which is the second largest insurer in UK, we are engaging with insurtechs on customer engagement, improving penetration, as in if the customer drops out after in the journey because there is too much friction, why is it doing so, and understanding the customer behavior along the quote and buy journey. And again, this is from conversion point of view, where we are using a lot of AI and alternate data sets to understand customer buying behavior. We are also using a lot of technology in claims fraud detection. Again, a huge amount of information is coming through the newer deep learning models in understanding behaviors of which could be classed as fraudulent, and also removing false positives, which is a problem with lots of claim detection models, that they will flag something as a fraud when it's not, and that causes a lot of customer disengagement. Again, in underwriting, a huge amount of enrichment is coming through new data sets and our understanding of broader ecosystem, and we're playing with insurtechs in this area as well. We do believe that a lot of the intellect and lot of innovative thinkings can be plugged into AXA PPP through engaging with these health tech, digital health, and insurtech companies. Also in building complementarity. So if we have a corporate healthcare scheme we're working with, but we could also give them access to, say, genomics, which would help them reduce obesity or smoking cessation, then we are bringing in health tech players who will be working with us in that area. So along the value chain, we have several core areas where we are working with health techs and insurtechs.
Follow-up question, actually. What's the biggest challenge in working with the startups, still, Parul? What's the biggest challenge in working with the startups?
I think the key challenge of working with the startups or with any partner is the expectation gap, and the fact that as a large corporate, you will have huge number of governance and areas where we will have to due diligence you on not just clinical side, financial side, regulatory side, which are intrinsically built into our model. And we do have lighter governances when we work on pilots, but if you hit industrialization or production, there will be a whole host of additional governances that you need to face up to. So the expectation gap, we feel, causes a lot of friction. And also a strategic focus, understanding of insurtech, that if something is nice to have but not a strategic focus for the insurer, the chances are that there will be no traction for it within the insurer. So that, I think, are the core areas for which I feel are in our experience, are where we have faced some disengagement.
All right, Brian, what's your view on this general topic on healthcare, but also in terms of life insurance? What's in terms of personalized care, etc., and what are the biggest challenges of the startup collaboration?
And I'll keep it short in the interest of time, but I've had numerous encounters, and maybe from the industry, speaking out maybe to some of the people of who are from the insurtech side of the house, they kind of fail to kind of understand, how these things are going to be paid for, and as regards, how they're an incremental item, possibly in the customer journey. And we know that there's obviously various arguments to be had, and these things do add value and so on. But it's the mathematics, and because the proposition, if people are getting it for free, which 9 times out of 10 they are, kind of thing. So in terms of how the economics work, so that's something that. I have a lot of conversations with people, and unfortunately all these good ideas haven't been fully thought through. So while I'm a big fan of all of these APIs and other InsurTechs, they certainly have a lot of uses both for society and the industry and so forth. It's just embedding them into the economics of the product.
All right. Tarun, additional points here?
I mean, not much more to add, really. I think they're both right. I mean, expectations are so important, and the reality is that we are a business, right? And so we don't give away money for free, and there needs to be some sort of pot of gold at the end of this rainbow. So there, that expectation piece is quite important, and then of course the need to be a bit patient, I think, with some of our larger insurers, because governance processes and bureaucracy is just unfortunately where we are today. Obviously, we're getting better at it, but I'd say be patient, because once we're linked in, we're committed, and we will follow you down this journey. So, and we will support you down this journey. So, I would say, be patient, and we will come through.
All right, thank you. So moving into the data topic a little bit from here. So obviously there's a lot of new data sources out there. There's also, as you mentioned before, regulation on whether that data can be used or not. Obviously there are a couple of examples already how personalized data can improve the healthcare, the customer journey, patient monitoring, et cetera, et cetera. So it would be great to hear maybe one or two success stories or examples from maybe in-house or what you've seen in the market. Brian?
Yeah, so just maybe firstly on the general topic, I think in relation to the use of personalized data, and I'm talking probably more so in the life industry, less so than healthcare. But so in terms of the regulatory, legal, and privacy constraints, I think there's maybe that's often underestimated, and people, particularly from people whose license isn't on the line and so on, and the amount of work. I would have said also as well in terms of the data, and maybe it's being proposed to be a proxy for a previous underwriting factor or a new underwriting factor. Is it credible? And certainly that's something sometimes that isn't maybe fully thought through. Also too, in terms of the actual, and Parul mentioned early on in terms of maybe some of the challenges of governance and so on, but like from the risk and audit community inside these insurance companies, is the actual collection of this new data, going to pass the test? So, for example, people in the United States have been talking about taking saliva swabs, as part of the smoking tests in terms of life insurance applications. So again, that's fraught with a lot of dangers, and while nice idea, but how do you can you prevent people sharing swabs from the selected people and so on. So in terms of, that's one aspect, I think, in terms of the actual data. Likewise, in terms of the pricing implications, maybe the industry needs to be a little bit careful that we don't price ourselves down to just random occurrence events, because ultimately if we keep, selecting the good risks, maybe the community may turn off, or the pricing as such may turn off, and the cross-subsidy and the mutuality and principles, might start to kind of die out kind of thing, I think, though, in terms of data as well, the insurance industry can, and this is a little bit tricky, in terms of, helping people with their data, but not using it to underwrite. And that's a very fine line to tread, in relation to, using data, and genomics was mentioned early on, and DNA and all that kind of stuff. So in terms of, if you can, in a ring-fenced way, assist people, going back to my previous comments, even sometimes with little cost or for free or whatever, and they can get a value add from their insurance proposition kind of thing. And also I think in terms of the personalised data, the one benefit, and we just touched on it earlier on as well, it does bring some of the previously uninsurable into the actual insurance range, and we've seen lots of examples of diabetics now being offered a proposition. I can say even in Brazil we're about to go live with a personalised insurance product that's actually going to be targeted at the diabetes community. So everything has a price, but I suppose in terms of if you get more data into circulation, you can soundly propose a proposition for a self-respecting financial organisation to safely put into the market.
Mm-hmm. That's a great example with Brazil. Thank you for that. Tarun, further thoughts?
Yeah, I mean, I think obviously what Brian covered makes perfect sense. I think also we have to think about non-personalized data and what's available out there as well, right? So you have greater access to population data, population studies, and that's being collated and aggregated and disseminated in some ways. And I think insurance companies can start to use that more readily and easily when they think about developing predictive products, right? Because then you start to see maybe some trends or some causation in certain cohorts or segments of the population, and then you can start to think about how you develop products accordingly. So I agree, personalized data will be important, but I think that the tricky side around privacy and where that leads in terms of risk coverage will sort of be a barrier for us to really move that forward very quickly. But I think there's a lot of work we can do with the more publicly available or population type data.
All right, Parul?
Yeah, so in terms of data, we are in a fortunate position of AXA Next being solely focused on complementary areas to insurance and moving from pair to partner. So a lot of friction, which Brian mentioned, around how much of the data which you are guiding a patient to a better outcome is then flowing through to your underwriting model and causing them to be excluded or priced out of that pool. So when we build complementary insurance models, there is a fair disclosure. We adhere to clinical regulations, and we are separating it out of the underwriting and pricing decision making, and are hand on heart able to say that it will not feed through to your pricing of your risk. Unless, of course, they sign off to it or agree to it in return for some kind of benefit, which I think Vitality is doing, offering some Starbucks coffees or whatever in return for, we're going to use your data, have a Starbucks. So we are divorced from that. We are in a lucky position where we are building complementary model rather than those that will feed through into the underwriting decision making.
All right. Yeah, definitely different approaches out there in terms of how to make the customer happy and get them engaged. But it's actually the holy grail of motivation overall, especially when you think about healthcare, to keep people motivated long term, from physiotherapy to chronic diseases, etc., and have them behave well according to their needs. That's all right. Cool. So let's jump into the topic that was briefly mentioned before, the predictive aspect of having new data. How can we become more predictive and have more predictive products than in the past with all this new technology, etc., available? So let's start with Tarun on this one.
Yeah. So just I guess to follow up on what I'd said earlier, you can obviously use the data in many different ways, right? So and understanding how the data sort of shows various causation effects and sort of looking forward in terms of where you expect the risk to evolve over time, right? So a 20-year-old individual will have a very different risk profile than a 40-year-old who who has maybe a child and a few other things going on, or high blood pressure or high blood sugar. So I think the data we'll be able to get from the individual will help us understand how they work. And then obviously when we start to look at some of the more broader population level data that I mentioned earlier, you can start to build some models to help us predict. And then obviously what you end up doing is you become more of I would say probably a lifestyle coach rather than a traditional insurance company at this point, because you're there sort of guiding an individual through their life and sort of providing nudges or advice and solutions to what needs that you anticipate would happen as the individual moves on in their life cycle.
Yep, and that begs the question of what's the role of the insurance company overall, which part of the value chain they are. Maybe we can also talk about this in a second, but what are your views, Brian?
Well, I suppose if you just talk about insurance companies, I would have said in terms of using predictive data. So if insurance company chooses to just be reactive, they're kind of on a path to extinction. And so the reality is that lots of data, and data is freely available, and more data is available with small amounts of interactions with your customers. And so masses of data out there, lots of individuals and software that can do a lot of analytics. So there's no substitute really for insurance companies not going down the hard work route, And there's obviously, we have a certain amount of risk factors at the moment that are not an exact match for the risks, and the data will help us get a closer match on that. So there's obviously a sweet spot where you're on the laws of you're kind of running into the diminishing returns. But then I suppose if you invest the time, that's maybe the easier bit, for insurance companies. Then you got to have the corporate guts to go with it, and that might also mean upsetting some of your existing channels and so on, and or dealing with people who are stuck in particular ways of working, and so that's also part of the challenge when you're looking at data, in terms of the existing, we'll say, views of how all of these things work. But the reality is, though, as I say, if companies choose just to react to how others have been doing, you're actually going to be out of existence fairly soon.
It's actually a good point that you make with the sustainability of the business model. I think a few months back I was in London here as well on a conference, and somebody from Liverpool, Victoria, he brought out a very bold statement, and he said, if you don't have a digital business in 5 years, you don't have a business. So if you were to put a timeline on your statement, how much time do you give the carriers to change?
Okay, I come from the life side, so unlike the non-life and health side, life is very much a long business, so I'd probably at somewhere in the 10 to 20 years side of things. But a lot of the C-suite though will be shown the door a long time before that, if they're living off their back book though.
Yeah, makes sense. All right. We touched base very briefly on this before, the idea of shared value insurance, in a sense that it creates also benefits not just for the individual but also for the society. So it's addressing overarching needs. So what are your views on this idea of a new business model, which kind of entails a bit more than just making money? Let's start with Parul.
Okay, so again, I bring the point of access and the point of protection gap, because I think that insurers, although sometimes it doesn't feel like it, have a societal role. We are pooling risks, and we are giving individuals, the feeling that they can go out and take risks. We'll have their back through the pooling economics that are at work in the insurance industry. To bring back to that ethos, it is very important that we reiterate that hyper-personalization and AI is not going to exclude people. It will include more people, and through complementarity of the business models, it will give them access to better treatment, better outcomes, and what I discussed about value-based care. So I do believe there is a lot of traction in the insurance and the complementarity model. We just need to bring it back to it rather than divorce it from each other.
All right, thank you. I also believe I guess we all agree that this is a very interesting, very innovative business model. Talking about innovation, obviously there's a huge gap between different players. Some do it better, some do it worse. Let's have the second poll question at this stage and go into the institutionalization of innovation. How well is that done? And we had a little question here. The answers would be: do you have an innovation team, innovation department, and also or a CIO? And the three answers are yes, there is also a CIO and an innovation department. B, there's only an innovation department but no representation in the board. And then the third answer, no. Well, basically that could still be a few passionate people who are just devoting 5% of their time to some innovative topics, but not at least in a structural way. So while the audience is voting, let's start with Tarun here. What are your thoughts on this one?
Well, to answer the question, in MetLife, no, we don't have a chief innovation officer as such. Now, in terms of institutionalizing innovation within an organization as complicated as we are, I'm sure many others are, I think there's a few things I would do. I mean, I think first and foremost, you have to look at your culture, and that tends to be driven from the top, and what you can see visibly in the C-suite does impact down the food chain, so to speak. And so, that's quite important. So having the commitment of the senior leadership in the company is quite important, and having the visibility around what they're doing to drive innovation is also very important. And I think also you have to look at including associates in your organization in the innovation process. So, I think we talked about it earlier in one of the panels, but having sort of an internal focus on innovation as well as having an external focus. So at MetLife, we do both. So internally, we're very keen on promoting ideas to be generated from within, and then allowing associates to take take those ideas forward, and then even partner potentially with a startup. So we do have collabs that come in place probably every 6 months or so globally. And then externally, of course, we also invest directly into startups through our digital venture fund. And then we're trying to get ideas and try to drive innovation from that angle as well.
All right, thank you. Can we see the results of what the audience has voted for? We're running out of time, but let's at least see the result very briefly. All right, so what do we have here? Only innovation department, so not a CIO. Then a fully fledged CIO and innovation team, 28.6%. And, well, unfortunately, 29% still don't have any innovation team. I fully agree also with from a plug and play point of view, in a sense that we don't even partner with corporates who don't have an executive buy-in. It doesn't have to be a CIO, but at least we say exactly we have the exact same view. If you don't have that representation, it doesn't make sense. It doesn't get enough push, and then everybody's just going to be frustrated in the end. And yeah, that's not going to be good for the organization overall. So that brings our panel almost to an end. Thank you, everybody, for participating. Thank you for joining us. Maybe to just wrap it up, what do you think 2019 is going to be in a very, very short statement?
Okay, maybe more for 2019 plus, I would have said, in terms of in terms of disruption and InsurTechs and related activities, we're only scratching the surface at the moment. So in terms of just some quick figures for you, so insurance market worldwide is about $4 trillion US dollars, breaks out into about 60% life, 40% non-life, and the claims, depending on products, you're talking about the claims ratio of 30% to maybe 65%, so maybe an average of about 50. Now, there's an awful lot of high overheads for companies, and in terms of the distribution costs. So there's massive potential there for industry itself and with its partners to actually go after that. And in terms of, there's also then the added benefit that you actually will increase the reach of the proposition, so closing the protection gap. So they're the kind of the positives and the good news. The one downside I probably advise people is that the days of insurance companies spending tens and hundreds of millions are long over, as regards, so it'll be very much qualified and frequently evaluated propositions and learning in terms of those investments and so on. Honesty, I suppose, of ambition and honesty of kind of failure.
All right, so partnerships, reach, and natural selection in that sense.
I'll keep it simple. I see opportunities. Opportunities for insurance companies and for InsurTechs.
Perfect.
Customer focus, new models, healthcare costs are escalating, and insurers and governments, public health authorities have to address it. And 2019 will be all of that.
All right, Parul, Karun, and Tarun, and Brian, thank you very much for being on the panel. Thank you very much to the audience, and have a good lunch break.